Hi everybody, welcome to another update on the gold forecaster index, the holy grail to predicting gold prices. In the last video, I said that gold would underperform, and that's exactly what happened. It went down from 1940 to 1840, and now it's 1820, so it's breaking down. So we are correct again. I mean, just do what I say. I can see the future. I have crystal balls. And that crystal ball is called the Gold Forecaster Index, which is using leading indicators to predict the gold price 2 months from now. So our new data point is slightly up in January, but it's still negative. So it's below zero. That means that gold will be weak going forward. So I will not be buying more gold or gold mines. So I would stay away from that sector. Taylor roll rate is also going down. So that means bad news for gold. Misery index is going down. We had very good jobs numbers today. So the job market is very strong and inflation is coming down. Very bad for gold. This is still old data. Chile and Peru, we have seen that production is down a bit, so that could support silver a bit, but I wouldn't buy it right now because look at this gap. This gap is still going to close, so I'm expecting gold to come down. So it's not looking very good here. LBMA silver holdings. This blue line is starting to move back up, and whenever that happens, silver underperforms. You can see the correlation clearly. It goes down here and it goes up here, down here, up here, and now blue is going up again, and red, which is a silver price, will go down. Here on gold, it's more a positive correlation, and this is declining. So gold will be weak. However, China is buying. So China bought a lot of gold in February. They were probably buying the dip here in February while it went down. But I don't see any upside in gold at this time. COMEX numbers, nothing special. The total silver ounces is still going down, which is bearish. US mint sales were actually pretty good, but let's see. Premiums are still very low, so you want to buy gold and silver when the premiums are high. Now it's come back down, so I wouldn't be buying at this time. Junk silver premiums also very low, so this is not the time to buy. Shanghai gold premiums, they went down to 0.6%, so also bearish. No, it's not a good time. PSLV premiums are still negative, so COT report is delayed. They had some problems, so we can't look at that. But even then, this is from 2 weeks ago. You can see that if this red line goes back up, then silver comes down. So we should wait for gold and silver to come down before buying. Also, the gold forward rate is now very high, which is very bad for gold because you need to buy gold when we are in backwardation, like here and here. This is too high, gold will come down. Lease rates were also not good. As you can see here, it's going down again, and here silver is also down. So expect silver to underperform in the coming month. Swiss franc is trending down, real yields trending down. So everything looks bad. We are in March. Gold will be seasonally very weak. Same with silver. This is going to be a weak month. So I would at least wait for April. Weak month, weak month. So yeah, it isn't looking very good. Bullish sentiment index is also starting to go back down. So yeah, that's the status on gold. Let's take a look at copper. Yeah, real economic activity is below zero, so that's not that good. I think copper can be weak going forward. Copper inventories, yeah, went up a lot, so there's plenty of copper out there now. This is a good chart, so I created a credit impulse chart based on total social financing, and that's 6 months accumulated. And that's the blue line. And you can see that it is correlated to the copper price, delayed by 1 year. So you can actually predict what the copper price is going to do. Blue line is trending down, but in January they added a lot of stimulus, so it's back up. So you can still see on average it will be down, I think. So I don't expect copper to do well. Shanghai is doing well, but that's because Chinese stock are cheap. GDP seems to be declining back into negative, so that's not good. But of course, in the future, copper is going to increase in demand by 50% in 10 years. But currently, I'm not that bullish yet in the short term. But in the long term, you can see that we will need a lot of copper. Okay, dry bulk also not doing that well. Tankers, however, are in a bull market. Yeah, Danny still forecasts that stocks will go up by 10%. Inflation is picking up. So trend is up. Lately it went down a bit, but trend is still up, so that's good for inflation. So we are going to keep buying commodities. I think commodities will do well. This is also important. We had a new update on the leading index, the Brave Butter Skelly index, which uses 420 leading indicators, and that's the red line is going up. So I expect the economy to do very well in the coming months. I expect stocks to go up. Airplane data was still at a high level, but it's not rising that much anymore. But at least it's not crashing. So there's still oil demand. Let's go with the stock forecaster index real quick. So this is the stock forecaster index, the blue line. It correlates really well with the stock market and it's going up. So I expect higher stock prices. You can click on all of these things yourself. I think we are in a good market. Smart money index is still positive. And look at how accurate this is. The smart money index has forecasted 4 months pretty accurately. The next month will be slightly in the positive in April, and March this month will be positive. So I don't expect any crashes. The Fed balance sheet is a bit weaker, but stock market is pretty strong. So liquidity is dropping, but the stock market is hanging on. So that's a good sign. Citigroup surprise index is also very strong at 35. So this should be up, down, up, down, but apparently it doesn't go down. It's actually going up. So in a down band, the Citigroup Economic Surprise Index is actually going up. So that's very bullish for stocks. And I remain long the market. Now over to money supply. We know that we are having QT. So money supply is dropping. Normally this is bad for gold and stocks, but well, it's not dropping that much. So we are still having a higher level from the COVID period until now. So I think this QT is not having that much of an effect. Japan was doing QE again, so but apparently it's now stopped. But the ECB and the Federal Reserve are still doing QT. Let's take a look at the TGA accounts. Do they have enough money? Okay, they still have enough money. So if this goes back to zero, like here, so I'm looking at the purple line, that's the TGA accounts of the Fed. If this goes back to zero, then you can expect money printing to come. But we are not there yet. So the dollar can still be strong, but once it goes here to this level, then the dollar will probably start crashing. Let's take a look at some credit spreads. So the credit spread is the green line. It's actually pretty stable. So GDP is stable. That's good for stocks. We got trade deficit numbers. Let's see. Services went down a bit and deficits on goods were flat. So not a lot has happened here. Trade balance here went up a bit, more deficits. So it's a pretty stable month. No big moves. Export prices went up and import prices went down. That's actually good news for the US. Export price index up and import price index down. Very good news. And this is still from Q4, but the latest import-export numbers were up. So actually GDP is improving. So that confirms that stocks will probably do well. Here we can see the 2-year yield, and that's also rising. So more rate hikes will come, and the Fed hikes rates because it wants to bring inflation down. And since the economy is doing so well, it can increase rates. So Fed is actually increasing rates. in a very strong market. So that's bullish. Capacity utilization was flat to down a bit. So that's a sign that inflation is probably going down. Less inflation. Okay, on to the blog posts. I thought this was interesting. I found a new correlation between the registered gold at the JP Morgan COMEX vault. And you can see that when it goes down, then the silver price goes down. And when it goes up, silver follows. And it's a nice correlation. You can see it here. So I will follow up on the COMEX vault of JP Morgan. Sprott has a new update on its holdings. And as you can see here, he bought some gold mines, but he sold battery and graphite names. So that's interesting. He's getting out of the battery metals space. He also sold some Newmont, Sandstone Gold, and Kinross, and dumped Endeavour Silver. So here you can see graphite is sold, Electra battery metals and materials is sold. So a lot of cells in that space. Interesting to see. Sigma lithium also down a bit. He probably knows that lithium is going down and that the valuations will come down in the future. So that's why I'm also out of Sigma lithium. And now I'm going into the more speculative names like Atlas Lithium, because it could be a buyout candidate. Sigma Lithium could scoop it up. It's just adjacent of that property. And they are now drilling. So there's plenty of upside in Atlas Lithium. I see less upside in Sigma Lithium. So that was evidence from Sprott that he's also selling these battery names. Now on to energy. I thought this was an interesting chart. You can see that this is a natural gas storage. The amount of gas stored in the system, and it goes up and down during the winter and summer. But the overall trend is that if storage rises, so here it rises, then natural gas prices go down because there's too much gas. So gas prices come down. And then here, when we had COVID, then the storage went down probably because a lot of drilling stopped. So they drilled less, so there's less gas production, etc. And then the storage started to drop, and that gave this spike in natural gas prices. But now COVID is done, so they're starting to drill again, and they produce a lot of natural gas. A lot. Okay, so storage is now starting to rise again, probably for 2 years, and that will be very negative for natural gas. So I have sold all my positions in natural gas once I saw this trend: up, down, up, down, up, down. So natural gas will probably hover between $2 and $3. And Eric Nuttall said that natural gas is going negative, so I believe him. Same here. Inventories and prices. If this is the price, If the inventories rise, then the price goes down. So this is the correlation. And I think that inventories will keep on rising. So natural gas prices will keep on falling. So there is this correlation. And I would pay attention to this. Onto oil, we know that Russia is going to cut oil production by 500,000 barrels this month in March. So I don't think they can ship a lot of oil anymore, at least for this month. This is how it looks like. And that will probably be positive for the oil price. Oil supply and demand update. So what do we see here? So here we had a stock deficit and oil went up. Then we went back in surplus in 2022. And then you can see oil going down. Now we are forecasting for this year back a deficit. So oil is going back into deficit. So I expect oil to go up. So I'm all in oil now and tankers. So I'm betting on this oil price to go up. Rig count vs oil production. So the rig counts are currently here and it's actually starting to drop a bit. So at some point when it reaches below 500 rigs, then you will see production go negative again. So you can look at these points here. This is year-over-year change in production. So if we see the rig count go back down, then at certain point production will start to go negative. And that's what I'm betting on. The oil price currently is too low to incentivize drilling. So you will get this scenario or this scenario with rig counts going down and production being flat or negative, which is positive for the oil price because there's less supply. Another bullish chart, the capex to sales ratio. So we had this boom in capex and that coincided with a rise in oil price. Then we went down, that's a down cycle. And now we should see an up cycle again. So up, down, and now up. So I expect oil to go up. Another chart for the evidence on the bull market in oil. And I'm also very bullish on tankers. As you can see here, crude oil in transit is rising. So more and more oil is going in transit. Also because the US is producing so much oil and needs to transport that to China. So this is going to keep on rising. Also in January, the tankers need to sail at a much slower pace due to the ESG, right? Because the old tankers cannot drive that fast because they have these emissions, they have these goals in emission, so they need to sail much slower, and that means there will be more and more oil in transit, right? You need more tankers because they are sailing so slow. So as this goes up, more tankers are needed, and the VLCC, Aframax, Suezmax rates will keep on rising. That's what I'm betting on. I see an easy double in the coming years for these tankers, and I will stay in that trade. some charts on copper. I showed this before. 50% increase in copper demand, but this is a long-term play. So wait for a bottom in copper first. You can see how big the deficit will be. Mainly China. So the demand is coming from China and probably also a bit of India. So this is India. And this is the copper supply, which is lower than the copper demand. So we will be in a deficit. So if we get a bottom in copper, then we will start buying it again. But I think that copper is currently too high. We'll probably go below 4. Last chart about Baltic Dry Index. I'm not a fan of the Baltic Dry Index because look at this. So what do they transport? They transport mainly iron ore, grains, and coal. So each one of these is actually in a bear market. Iron ore and steel. I don't think that China steel production is rising. So this is probably going to be a flat market, at least for the coming few years. Grains is also not going to rise because China's population is going down. It's not going up. So less grains will be transported. Coal, coal, we are going away from coal, especially the Western society is going away. Okay, Indonesia, China are probably going to use more of it, but eventually there are other sources of energy that we are going to use. For example, nuclear, nat gas. So I don't see a lot of upside in the Baltic Dry, and you can see that here. For example, China steel production, which is 60%, dry bulk 67% is these three here. So iron ore is one of those big three. As steel production goes up, the Baltic Dry goes up. As steel production is flat, Baltic Dry goes down, steel goes up, Baltic goes up, and now we are flat. So everything depends on this chart. Do you think that steel production in China is going to keep on rising? I don't think so. I think we are at the peak now, probably. So I don't expect such a spike anymore in the Baltic Dry, so we'll probably hover somewhere here. And there are a lot of Baltic Dry ships coming online as well in the coming years. Container ships are even worse. A lot of container ships are coming online. So focus on the tankers and forget the Baltic Dry and the containers. So what was the conclusion? We are going to stay away from gold, and instead we are putting our money into oil and tankers. Also in speculative lithium plays. The big ones are still okay to buy, like Sigma Lithium, but the valuations are coming down. So move those assets a bit into the more speculative ones like Atlas Lithium, because that will do much better. So that was the update, and I'll see you in the next month.